Welcome to Markets Now. I'm Michelle Rugg with Mike Miner of Professional Ag Marketing. Well, grains ended mostly lower except for corn. We had new highs over in the hogs and mixed in the cattle market. So let's start off with the bright spot, Mike. Corn futures to the plus side all by their lonesome. Is that demand or are the funds just continuing to push their long position here?
I think it's a good part to really look at the fund money flow into this grain market. Days like today, where you see inflation really a concern again, we've seen money flow into some of these ag markets, and corn having improved fundamentals since this last summer. The funds have reduced their short position and now made a pretty sizable long position. So seeing fund money flow into the corn market makes sense right now, given they have pretty good fundamentals actually, and that's kind of a good bet historically here, buying some grain markets. So I feel like it's funds at this point. Ethanol's been a little bit choppy on production. We've seen stocks really rise up here, so I don't know how much more we can get out of that. But for the time being, we're still really competitive on the export market on corn price. So I could see that kind of maybe the USDA adjusting demand a little bit higher going forward in some of these next reports.
So you talk about funds buying because of inflation, and the CPI number today at up a 0.5% really drove that, didn't it?
It did, and I didn't see necessarily at the end of the day maybe trade exactly the way I thought we would hold through the day, but right when the report came out, it made sense. Equities dropped off pretty hard, the US dollar moved, but at the end of the day, I think the markets kind of settled back to where they probably needed to be anyways. Equities kind of gained back what they had lost. So very interesting trade, but that CPI number it continues to remain sticky. I mean, you're around 2.9%. They can't seem to get it to 2%. And that's going to be a struggle going forward, I think. And, this administration really wants to drop interest rates. But at this point, it's going to be difficult for them to do that if we continue to have what we would consider sticky inflation out there.
Despite higher corn futures, soybeans went the opposite direction. We sank in the soybean market, and are we starting to see some South American hedge pressure there, or is it the turn that we've seen maybe in the Argentina forecast?
I think it's a little bit of both, but I think at this point we're finally starting to see some harvest pressure. We haven't seen a whole lot up until this point because I would argue we had a late planting start in South America. And then when we finally got going here, we've had a lot of rain, so higher moisture, a later planting start. We had condition problems at the beginning of their harvest. We had a few halted shipments, for example, to China. And now we're finally getting into kind of the really run of harvest here. You're over that 0.25% harvested or so for Brazil, and they're really on the home stretch. So they're going to harvest a lot of soybeans here. You're going to see more exports out of their country, which you've seen US basis levels back off now on soybeans around the river. So it's about time. It took me probably longer than I would have expected to get to the middle of February before seeing harvest pressure, but it's about time, I think, Michelle.
Yeah. Do you think we did any technical damage with today's plunge on the soybean chart?
Not really too bad yet.
Okay.
I had you have another day like today, then for sure. But I'm not too worried until we take out some of those old low levels that we've experienced in the soybean market. So at this point, we know it's been super choppy, so I'm not too worried there. Kind of towards a lower Bollinger Band here. I'd like us to find some support or at least trade sideways here. But choppy trade, I think, is going to have to be expected for a little bit out of all three of these, corn, wheat, and soybeans.
Gotcha. So the wheat market today was not able to follow corn higher. It didn't get help from the lower dollar. Why was it under pressure?
I'm a little concerned about wheat. I thought the trade would have been a little bit more friendly, especially given some of the news headlines that maybe we're resolving or negotiating a deal between Ukraine and Russia right now, where it would involve Ukraine giving up a little bit of territory to Russia, which I think was kind of where we've been heading at this whole time. If Ukraine could just give some of their eastern part of the country back to Russia, I think that's kind of where this is heading. And at this point, I thought that would have been a little bit more supportive. Since this war's been going on, Russia's just been unloading wheat onto the open market to help fund that war. And if that war stops, I would assume, a lot. I presumed that the funds would assume that would stop some of those cheaper exports as well. So I'm a little concerned about no reaction really to the upside out of the wheat market today after we've spent the last 2 years doing nothing but go down. So I would like to see some more appreciation out of them, but today was really underwhelming, I thought, for the wheat market here. It has had a really nice recovery recently. A lot of funds have been coming in, and open interest has been dropping, so they've been covering up those net shorts. But I want to see some more of that before I get too excited. In the meantime, I think you've got a couple months here on the wheat market that could be quite exciting.
Yeah. All right. So I'm going to call cattle kind of a consolidation day here today. We had some lower cash trade already this week, but do you think we can hold here?
Yeah, it's a pretty good place to hold, I think, technically speaking. There were some concerns about plants maybe closing because of the weather and things like that. I think it's just a fantastic time for them to gain some leverage back, probably, and not have to make up for that kill. So we've seen some significant chart weakness here this month, and it's given funds probably a little bit of a reason to reconsider their record net long positions in cattle. Hogs are right there with it from a fund perspective as well. So I'd watch that liquidation occur. But fundamentally, I mean, cutout was down a little bit recently, but nothing to be concerned about yet. And at this point, I don't see the leverage slipping back at all away from the producer. So unless we see plant closures and things like that really continue, or economically speaking, we see something massive happen there that would concern them, I don't see this cattle market going anywhere for the time being. Not saying
Good.
that, I mean, shouldn't protect themselves because we're
Right.
at crazy prices, but that's just my take.
And new highs in the hogs, is that fund buying, or is this being pushed by product values, the higher cash trade?
I think it's probably a little bit of both, but I think this real recent rally, I mean, we've got cut out almost up to 100 again. I think it's performing quite well. I don't know if bellies can continue to do what they're doing. From a seasonal perspective, we should be about done there. I'll look for some of these other primals to really take hold now and run higher from a seasonal perspective. But at this point, we're sure performing well fundamentally for this hog market. So if the funds are buying a little bit, the fundamentals aren't holding them back at all, I would say at this point.
No, and you've got slaughter levels running below expectations below a year ago too. That helps, doesn't it?
It does, and production the last 2 years probably has been quite superb because of just better production out of sow units, and no real expansion going on in the industry. I mean, anyone that's growing is just acquiring or merging, something along those lines, not necessarily true expansion in the industry. And you're probably not going to see a lot of that until we have, consecutive years of better margins like what we can here the next 12 months looks
Right.
like. But at this point, anyways, not a lot changing from a total numbers perspective out of the United States. So as long as choice cutout stays high and pork cutout can kind of try to tag along, which it's not done the best job of doing that so far. The relationship of those two are quite wide, but $100 on cutout in the middle of February isn't anything to be disappointed on either.
No doubt. All right. Thanks so much, Mike Binder with Professional Ag Marketing. That's Markets Now.